Hello traders, and welcome to Momentum Doubler for position sizing. This is Ken Calhoun, president of DayTradingUniversity.com, with some position sizing and breakout strategies for our markets here on Monday, March 28th, 2011. Let's put things in context by looking at our spiders. What happened in our pre-market? Usually, Mondays will open up relatively slow. That was the case today. A small in-range gap up in our spiders, but we're at or near previous day's highs. So this is a good time to look for potential breakouts. As a trader, one of the things I'm always scanning for are which ones have better relative strength, which ones have done great opening breakouts before the broad market moves. Here's a good example of one today. Lululemon, you can see LU, the ticker, it's gone from 79 to 83. Now, if you learn how to size into trades, let's say you missed the first breakout, but you're still interested in potential swing trades. Well, this is the type of chart to look for, one that's taken out a new two-day high on relative strength that's better than the broad market. Here's another good example, CLNE. Another good one, Broadsoft, BSFT, starting to pull back. As a trader, I may be looking to swing trade into this on a breakout over, say, 45 and a quarter, 45 and a half later in the session. Another good one to look at is US Steel. The ticker is X, and you can see here it's moved up highly. Now, one of the things I want you to learn is how to scale into a position. And the first part of that is, what's worth trading. And a good example are these type of charts that are outpacing the broad market on both two-day highs as well as 55-day highs, as US Steel does have here. We can put that into view. Relatively choppy chart, however, so I'm going to be a little more skeptical. I might get in long if it breaks the 56.5, 56.7 or so later in the session. But one of the things we want to learn how to do is scale in by starting off new trades with small size. Similarly, let's say if you're trading the ES, this is our ES 1-minute tick chart on the E-mini S&P 500, you can see all the longs are waiting for it to break the 131.450, right? So if you're an ES trader, you're looking for a micro cup breakout of around 3 ticks above that high before looking to initiate a new contract entry, right? And one of the biggest challenges as a trader is on Monday mornings, typically we have relatively slow markets, and a good time to practice your patience and not to overtrade waiting for these breakouts, because again, if you buy the first breakout, it may well retrace, and it's frustrating. What you want to do instead is focus on those that have very strong breakout patterns from a relative strength standpoint. And again, how to do that, at least in eSignal, you can just pull up the leaderboard and do things like very short-term ups, see what else is moving sharply for breakouts. Here's another one, Schlumberger SLB, the ticker. You can see a good two-day high cut breakout over the 88. Those are the type of trades we're looking to take. And again, the good news is, even if you are late to the party or not in on trades on initial breakouts, you can still scale in professionally, very carefully, by getting in small shares on continuation breakouts that might activate later in the trading session for either an intraday or a swing trade. Let's take a look at some of our ETFs. ERX is up the most here. Oil Holders second. DIG in third place. They all look like, well, the first three look like decent charts here, so we'll see if those take out new highs. Here's another good quick tip. Keep an eye on the QID, which is the ultra short Qs, and don't go long if it is taking out new two-day highs, because it's a short ETF. It's a good contrary indicator. For example, our ARMS indice for the NASDAQ market, our trend is a long trend here. It's under 0.7, which I teach is a good long market. And of course, you see the Qs, the short ETF, retracing on that. Just a good quick tip to keep you out of trouble is don't go long if the short ETFs like the QID or FAZ or others are taking out two-day highs. This is going down, which is a good lead indicator that the broad market is going up, right? And you can see that in things like our Qs and spiders and the rest of it. What you want to do, though, is translate that into a trading decision, whether you are a swing or an intraday trader, by using position sizing. And again, it doesn't have to be a day trade. It can be just a continuation breakout swing trade or even a pivot trade. For example, Broadsoft had sold off quite a bit. This is the 15-day on Broadsoft from 56 high all the way down here to 45. What kind of pattern do we see down here? Well, we see support at just over the 41. So if we take out new highs above a cup, the conservative entry would be somewhere over 47 and a quarter. From a position sizing standpoint, may initiate a new trade over, say 45.5 or so would be a decent place. Again, it's not a trade recommendation for paper trading only, etc. But those are the type of things that you want to look for. Are those that are outdoing the broad market? If the S&P is relatively choppy or it is not yet at a new high, what you want to look for are those that are taking out new highs. And again, it's always good to just pull up the spiders. Now we're 3Qs. Back to 3Qs for some reason. Anyway, spiders and Qs to see if they're taking out new highs. And if they're not, then selectively give preference to those that are taking out 2-day high breakouts, and only start scaling into those if they take out continued new highs. Now, I teach traders how to trade breakouts in Breakout Mastery. I teach traders how to position size or scale in using my new Momentum Doubler trading system, which is currently on sale with it's a brand new release. I'm just releasing it this week, and it's just $4.97 for 3 DVDs plus a full year of bi-monthly trading webinars. So that's 6 premium webinars plus a full 3 DVD system, which I created from several popular webinars I'd done late last year. So that's a good place to get started on all the core trading strategies for how to add to winning positions, and more importantly, how to start everything off real small. How to trade really small share. For stock traders, I also cover E-mini and Forex and ETF strategies. So no matter what type of trader you are, swing or intraday, and for any of those instruments, I cover you with the different, I've got you covered with different examples for each of those type of trading strategies. So again, this is something I've got going only through April 2nd. This is my early bird launch, and you can see all the comments from traders asking questions, and it's currently $4.97 just through Sunday, April 2nd, which is coming up real soon. So if you have not yet ordered your Momentum Doubler system, it's a really good way to learn with me. The main thing is you get a full year. That's 6. Every other month I'll do a trading webinar for you specifically and solely just on position sizing, looking at some of these types of breakout charts. So the challenge is not only how do you scan these, but how do you manage your trade entries and exits? And the Momentum Doubler system is what I've created for teaching traders how to use position sizing in very conservative, very small share or small lot or small contract, depending on what you're trading, very small conservative trades to get the ball started, get the play in motion, get your trade started. But I want you to do it on, ultra conservative, a very small size, so that if you're wrong, the stop isn't going to cost you much. But when you're right, on those that you are right on, maybe only 20-30% of the trades, that's fine. The key is, you can see here a good example. I was only right. I made $660 on this trading day. Now these are all day trades. This is an active day for me. I was right on these that were blue. These are green winning trades. I was wrong on all these that were red. I was wrong, 70% of the time, but I still walked out of the market with $660 net profit that day because I used position sizing, which means scaling into the ones that are working. And even then, these are all small shares, right? They're all under a few hundred shares, Massey being the biggest one at 350. Most of these are down at 20, 15, 20 shares, 50 shares with $1 commissions, and really good way to look at how to scale into winning trades. So anyway, I'm Ken Calhoun, daytradinguniversity.com. Thousands of traders trained. Go ahead and order this if you haven't already. I'm sure you'll be happy with it. The main thing is every other month you get to meet with me. I'll be there for at least an hour and a half, going over entry and exit strategies with position sizing, how to scale in, where to set the first entry, how to set the second entry, how to scale up, and also how to scale back down when things are reversing or pivoting against your initial entry. I teach you exactly how to set your exit, not only your exit targets, but your exit trailing stops as well. So very good precision trades for both swing and intraday traders, and that's on sale now at MomentumDoubler.com. Okay? So to wrap up, here's the takeaway, the main takeaway. Take a look at the spiders, and more importantly, take a look at those stocks and ETFs and other instruments that are taking out new highs that are stronger than the broad market, and make it work for you. Thanks so much. This has been Ken Calhoun, daytradinguniversity.com. Go ahead and order MomentumDoubler.com today.